It's Friday, the 25th of November. Hello and welcome to Business Incorporated, coming to you live from Channels Television Broadcasting from Lagos. I am Bolaji Akinwale. Today on the program, EU insists the UK will be left without access to the single market unless there is free movement of people. India's former Prime Minister criticizes currency move, plus record Black Friday sale expected globally. We'll begin with the EU leaders saying that they are serious when they say the UK will be left without access to the single market when it leaves the bloc if there is no free movement of people. Malta's Prime Minister Joseph Muscat, whose country assumes the EU's presidency in January, says this is the position of the EU and is not going to change. Much political debate has focused on the possibility of a soft Brexit, which is the UK retaining some form of membership of the single market in exchange for conceding some control over immigration. The hard Brexit means leaving the single market but having fuller control over migration. Mr. Muscat said that the UK and EU needed to first reach agreement on a range of other details once Mrs. Theresa May triggers Article 50 of the Lisbon Treaty. These include the bill the UK must pay before leaving, establishing what will happen to the UK Republic of Ireland border, and work out interim arrangements on issues like security. Meanwhile, the European Central Bank says the political uncertainty is putting the Eurozone's financial stability at risk. The Brexit referendum and the US election both moved up what it calls its composite indicator of systemic stress. It says that the 19 countries that use the euro could be hit by trade wars, higher inflation and rising US interest rates. In the worst case scenario, the ECB says that this could reignite the 2009 Eurozone debt crisis. It also warned that some stock markets could be heading for sharp falls. Valuation measures are in some regions hovering at levels which in the past have been harbingers of impending large corrections. The bank is also worried about political uncertainty within the Eurozone with a constitutional referendum in Italy on the 4th of December and elections in France and Germany next year. Now let's take you to the markets in Europe, where stocks were flat this Friday amid what is likely to be low liquidity owing to a shortened session on Wall Street after the Thanksgiving holiday. Ulrich Bath, HDW-TV financial correspondent, is joining us from the Frankfurt Stock Exchange. Ulrich, thank you for your time. Now let's begin with an update on the ongoing Lufthansa workers' strike, now in its third day. What is the latest in this, and what is the market's reaction as well?
Market's reaction is one of disappointment. Initially, the first 2 days of the strike, the share hardly reacted at all. In fact, it went up, but since yesterday, the share is going down just a bit. People think that considering the size of the strike and how many millions Lufthansa is losing and how bitter the strike is, how far the two parties are from agreeing, that the loss to the Lufthansa share is quite moderate indeed. It doesn't look as if there's any intention on either of the sides to return to the negotiating table. I should correct myself. Lufthansa, the corporation, does say let's go into mediation, but the pilots, who are the people on strike, say no way, give us a good offer and then we can negotiate for ourselves. The pilots want more pay. In reality, they want a lot more than just more pay. They want to basically stop the restructuring and moving towards a discount model for a big part of the Lufthansa Group operations. But they do want accumulated 20% pay increase going back several years, and Lufthansa says we can't afford that. And Lufthansa also says we can't afford the demands for going away from the restructuring. We just need cheaper costs on the personnel side. Hundreds of thousands of people are affected. The strike is not only continuing today on a third day, it will continue tomorrow, and tomorrow it will hit long-haul flights, that is, over average number of private people going away on vacation or coming back from vacation, seeing loved ones. And the feeling in many passengers, of course, is that they're getting frustrated. It's the 14th strike by the pilots since April 2014.
Now, in the UK, third quarter GDP came in today at a steady 2.3% year on year. What does this GDP numbers mean post-Brexit votes in June?
I think people are surprised that the drop in the GDP is not more pronounced. Sure, there is a drop. There's some effect of the Brexit and of uncertainty in business being felt. But I think many people watching Great Britain agree that with the government that the economy will be hit more next year as details, as maybe more certainty of a Brexit comes near, and as companies become perhaps even more nervous and lower investment, stop investment, maybe even move out of Britain, and thus endangering a lot of jobs as well. So these numbers, yes, they are lower, but I don't think we can conclude for the moment that Brexit has had a tremendous effect on the British economy so far, but the fear is that it will, and that that effect will come.
It is Black Friday today, the day after Thanksgiving, a bonanza for U.S. retailers, the day with the most turnover of the year. What is it like in Europe and in Germany, where you are?
Yeah, it's hit these shores as well. In Britain, it is the single biggest day for retail this Black Friday. It has developed there very well. In Germany, a lot of people are using it as well for discounts. Big companies like Apple or Amazon offer discounts and hope to lure customers early in order to lock that money into their cash registers. And but it's not the fact that everybody's waiting in front of the stores to open and maybe camping out during the night, as we've seen pictures, images from the United States spilling over. But people are slowly coming into that. But I think a lot of Germans will still go to the stores until Christmas, perhaps even a little bit beyond. GfK, an institute that polls consumer confidence here, says that Germans are more consumer friendly this year than last year. They intend to spend about 280 euros this Christmas season for gifts. That would be 6 euros more than last year.
Interesting, Ulrich. Thank you so much for your time with us on the show today, and do enjoy the rest of your weekend. Ulrich Babb is DWTV financial correspondent reporting from Frankfurt. In Asia, the markets were positive on Friday amid a lack of queues from U.S. markets, which were shut on Thursday for the Thanksgiving holiday. Australia's ASX 200 closed up 0.41% at 5,507.8 after initially opening flat. BHP Billiton climbed 2.28% to 26 Australian dollars a share. The Australian miner announced early on Friday it had approved $181 million to fund the compensation programs at its Samarco joint venture in Brazil. In Japan, the Nikkei 225 wavered toward the end of the session but finished up 0.2%, while the Topix closed up 0.31% at 1,464.53. South Korea's Kospi ended 0.16% higher. Hong Kong's Hang Seng was up 0.56%. The Shanghai Composite closed up 0.61%, while the Shenzhen Composites finished up 0.3%. Okay, the Nigerian capital market just got back its quarterly journal after 15 years of discontinued publication. The journal was relaunched on Thursday at the final Capital Market Committee meeting, which held in Lagos. Speaking on the motive behind the resumed publication, the Director General of the Securities and Exchange Commission, Mr. Munir Gwazo, tells Channel's business news producer, Temple Ashaju, that the publication will enhance market literacy.
The journal used to be done by the research department of SEC. So what is different now is SEC has one of the richest research department probably in the history of the capital market. Not even as of today, even in the history of the capital market. The research is being headed by a professor of econometrics. Is also being assisted by 2 other PhD holders who have one of them specialized in economics and also is an econometrician, another person in policy and strategy. And in the same department, we also have someone who is both a chartered accountant and also a CFA. And in my office, I also have someone who is also a PhD holder in economics. So I think the strength of that research department, which is within the SEC, I believe will be able to maintain the tempo. In the past, once you are only relying on the head of that department to drive that initiative and that head of the department leaves, you realize that such initiatives will not be there. But now that the department is highly fortified, we believe that the momentum will be sustained.
The Commission also just launched capital market studies in collaboration with another institution of the federal government. Is there any particular role that this journal is intended to play in the scheme?
Okay, this journal will look at College of Education and universities. And like we said, at every CMC, we're going to come up with a new journal, and we're going to distribute it across the market. Importantly, we're also going to distribute it to all the universities and College of Education. So that's for the journal. But the same editorial board would also be looking at information that cut across primary and secondary school level. So on one part, this journal would satisfy the interests of those in polytechnics, College of Education and universities. And like I said, the same editorial board would also drill it down to the level of primary school and secondary school. And just last week, we signed an MOU with the National Educational Research and Development Council in terms of how we can partner. And we have 9 deliverables and also a timeline on how we're going to implement it. We've also challenged the editorial board to also come up with certain questions and answers in different languages that we can now channel to those in primary school. And we just finished our financial literacy week, which we did in Kano, Port Harcourt, and Abeokuta. Now, looking at next year, I've challenged them today, the committee, to also come up with a program for next year, so that every quarter we should be able to do one initiative with respect to financial literacy. Now, when we do such initiatives, we're also going to have opportunity to now share those information. Those information will not only be in the hard copy, but it will also be in our website and in also electronic form.
There definitely will be so many frequently asked questions, such as the cost of publication, who bears that cost, and of course, how often will it be released to the market?
For now, we have to drive it. SEC has to bankroll the entire cost, even within our meager resources. But we believe, as part of our mandate, which is the protection of investors and development of the market. So we see this as part of our core mandate, which is development of the market. And for now, SEC is taking the entire cost, 100%, in terms of the printing, whatever, even fees that we pay to the external facilitators, external editorial members, where we have Dr. Katata, we have Professor Rano, we have Dr. Uche, and we have Mr. Tunde, who is an SAN. We bear the cost of all our engagements. So for now, SEC is going to bear that cost because we think SEC has that responsibility to drive these initiatives.
Distribution, will it be sold out? Will it be free?
For now, it's going to be free. And that's why I said we are looking at it as part of our mandate in terms of market development. So I don't see us putting any, even though we're in a very difficult financial situation, even though we need money, but I think we are more driven by our mandate in terms of market development.
How often will it be published?
We intend at every CMC, and we have now zeroed down our CMC to be 3 times in a year. It used to be every quarter, but now it's going to be 3 times in a year. So we intend at every CMC we're going to come up with it. So in the next 1 or 2 weeks, I've already challenged the editorial board to sit down and start thinking about some contemporary issues that we think will benefit to the market. And if you look at the 5 issues that the journal has so far come up with, they are very germane and contemporary issues that I think everybody would want to read and and get an insight on those issues.
And that was the Director General of the Securities and Exchange Commission, Mr. Munir Gwazo. Now, former Indian Prime Minister Manmohan Singh has criticized the government's move to ban 2 major currency notes, calling it monumental mismanagement. Mr. Singh, the architect of economic reforms in the 1990s, said the GDP would fall by about 2% because of the move. Earlier this month, Prime Minister Narendra Modi announced that 500 and 1,000 rupee notes have become illegal as part of the crackdown on corruption. It's time for a break. Business Incorporated returns in just a moment. Please stay with us.